Gann theory suggests that former highs and lows can produce highs and lows into the future. The market has a memory, if you will, and it responds to those major highs and lows all the way hundreds of years. It can be a long time, going back, for example, September 3rd, 1929, 91 years ago, to September 3rd, 2020. The high came exactly in sync with the anniversary of the 1929 high, September 3rd. So I pointed this out on September 3rd. In a YouTube video, I told people that, hey, pay attention, this might be a high. So now what I'm saying is that October 2nd is a momentum peak, even though it's not the actual high. The high was August 25th, 1987. To my thinking, the lower high is more important because that's where you got the big sell-off. That's why I'm calling it a momentum peak. And what I would say to you is that if you see this market start to sell off on October 2nd, do not ignore what's happening. There are certain Gann levels that will confirm that you're starting a major move down. I'm not here to give you those levels today. If you subscribe, you can get those levels. But right now, I think it's quite useful for you just to pay attention Friday, October 2nd, because that is the anniversary of the momentum peak. And if you start to see it slide tomorrow, just be advised it might be the start of something big. For the same reason, the anniversary of the all-time high, 1929, September 3rd, was important for the Dow. It gave us the peak here. I believe this was a high for the Dow here in 2020. The only question now is, how high will you go before you start another move down? That's what we're really talking about. And if you want to see what the S&P is doing now, this is the high back September 2nd for the S&P, September 3rd for the Dow. Sold off, rallied back. This might be a lower high. Look at the similarity. From August 25th, sold off, rallied back, lower high. It looks kind of creepy, but that is what happened with the S&P back in 1987. It sold off, rallied back into early October, and then it really plunged. And now we've sold off, we've rallied back. Now, granted, a lot of skeptics will say, hey, that doesn't prove anything. I'm not saying that it's necessarily going to crash. I'm saying that you got to pay attention. And that's the whole theory behind cycles. You don't trade just on the cycles. The cycles, sometimes they work, sometimes they don't. The anniversary of a former high or a momentum peak doesn't necessarily mean you're going to crash. It just means that you have to pay attention. And then the way Gann works is he always emphasized the point time and price. If you take out certain key Gann support levels, then that confirms that the momentum peak of October 2nd is, in fact, something to pay attention to. So what I'm saying is 1987, it's something to pay attention to now. Let's see what happens tomorrow, Friday. If it starts to slide, just be advised it might be the start of something big. But again, you're going to have to take out certain Gann levels to prove that this is really something big. It may not be. It might just, sell off a little bit and then bounce right back up again. All I'm saying at this point is that Gann is about time and price. We now have time. We have a time that we're worried about. We're worried about October 2nd because it's the anniversary of this momentum peak back in 1987. And from a Gann perspective, if you take out certain key support levels, it will confirm that we're following that same pattern. And you saw what happened here in 87. Pretty nasty little slide. Now, a lot of people look at, they remember, actually they misremember the crash. They say, oh, the crash came on, October 19th. No, it didn't. Look at the data. October 19th, it was already crashing back here. Now, a lot of people will say, oh, I don't need to really worry about it because this may not happen. Well, you might be right. I think the time to worry about stuff like that is before the event, not after. Call me crazy, but that's the way I view it. If you see a pattern developing and you see it start to slide, you don't want to panic down here. You want to panic up here. The point is, the early bird gets the worm. You want to be prepared for the possibility that this cycle, this anniversary of the momentum peak of October 2nd, 1987, might be an important date. That's all we're saying. Nothing's ever guaranteed. There are plenty of anniversaries of important highs that, they come and go. Nothing happens. But if they do happen, you pay more attention. So, in fact, I tell you, September 3rd, 1929, September 3rd, 2020, that has the hair on the back of my neck standing up. This is a big deal. This is one of Gann's ideas. He's got many tools, but this is something you want to pay attention to. And if you have a combination of that anniversary calling the actual high here in 2020, and suppose that this one does call a lower high here in 2020, with the S&P starting to slide here, you can see it's not really doing much right now. It's at 3380, but let's say tomorrow it starts to slide. Well, you might want to take evasive action. That's all I'm saying. I'm not here to tell you to buy or sell. This is strictly for educational purposes. I want you to understand Gann theory, and the major thing that I'm pointing out today is the anniversary. The anniversaries of former highs and lows can ripple through the future. They can actually cause changes in trend in the future that might be hard to swallow, but it happens. All you have to do is look at the charts to see that I'm right. It happens all the time. We just saw evidence of that with the Dow. September 3rd, 1929, September 3rd, 2020. So let's see what happens. Keep an open mind. And this is going to be interesting.